Okay, welcome back everybody. This is again a bit on business taxation. We are going to continue some first steps of yeah, dealing economically with the data which we got from our tax knowledge. So today we speak a bit about the possibilities to compare the tax burden of different legal forms. So we are here. Well, and what motivates the topic is, you have, when you establish an enterprise, a choice between different legal forms. So you can decide to run an enterprise as a sole tradership. You can say you establish a GmbH, so a juridical person. And in both cases, the tax conditions are different. In case of a sole tradership, you yourself run the enterprise, you pay income tax on the profit which you will have. On the other hand, if there is a GmbH, then you are going to no, not you, but the GmbH is going to pay corporation tax. And after the GmbH distributes the profit, then you are going to pay income tax on the dividends which you receive. So we might make a calculation in a very simple way, probably. Let's think about this here. If you have a corporation and the profit is 100, then the trade tax shall be, let's assume, 400%, then that is 14 points. Income tax when the profit is earned, no taxation of the income. So hereby corporation tax would be 15. We just do as if solidarity surcharge had already been completely removed, and a church tax will not exist for a GmbH. So we end up here with a net result of 71. If you can distribute that all as a profit, then you would have to pay 25% dividend tax. And again, we assume there is no such tax and no solidarity surcharge, just to make things a bit more easy. So then the net result is 53.25. In case of a sole tradership, you would again have a profit of 100. 14% would be trade tax on the assumption that 400% is the multiplier. You would have to pay, let's assume you are in the very top bracket of the income tax tariff, then you would have to pay 45% tax. Would get the 14 trade tax credited, so you pay additional 31. Your net result is 55. Yes, and when you distribute it, so when you take it out of the enterprise, well, nothing happens because the money in the enterprise is already your money. So when you take it out, you don't get richer. That's not an income for you. So there will be no second taxation if you take cash out of the enterprise. So here we have net results of 53 and 55. Yeah. And here you see the animation is a bit delayed, so the result is based on the assumption that we have 400% trade tax and that you as a manager of your GmbH got no salary paid. This is rather a very, very simple idea, simplified, but you can already draw some conclusions. For example, the corporation is slightly higher taxed than the sole tradership. On the other hand, half approximately of the tax in case of a corporation, namely the tax on the dividends, is only paid when the dividends are paid out. So here you have a kind of tax break or a tax pause. So the owner can determine when the second half or the second part of the tax will be paid. So if you do not pay out dividends, that second half will never have to be paid. Insofar, you alone can postpone the second half of the tax in case of a GmbH. Then you get away with a total tax burden of 29 instead of 45. And the trick is that the 17.75 or so what you have to pay on the dividend can remain within the enterprise and work there, can be used as capital to finance investments free of interest as long as you do not pay out dividends. So that might be an advantage. This advantage in the finance sector can compensate or most probably even overcompensate the disadvantage from the slightly higher rate which you have to pay. On the other hand, if you directly take out the profits from the enterprise, then it seems to be absolutely clear that the tax burden will be immediately higher for a corporation than in case of a sole tradership. So the corporation is only less advantageous if the profits are distributed immediately. And that explains why some people choose the sole tradership and others choose the GmbH. Without that, one of the two legal forms completely dies out. But that, ladies and gentlemen, would happen if one of the two legal forms is definitively and always better than the other one. So the first thing we can learn from this analysis here, it strongly depends on the circumstances, on your individual plans, for example, on your individual income tax rate, on your plans, what you intend to do with the profits, and so on. On all these factors, it depends what is the best legal form for your enterprise. We can even draw some additional conclusions from the data we just generated in a very simplified way. For example, I could ask you, okay, now a corporation is taxed a bit higher than a sole tradership. That means how much money do I need to produce more before tax in order to compensate for the slightly higher tax rate? So how much money do I need to produce in a sole tradership, and how much do I need to produce in a corporation in order to get the same identical net result of, let's say, 100? In that case, we can solve that question based on the same approach as which we have already met in the last video. The net amount shall be 100, and the net percentage which results out of the gross profit of 100 is 53.25%. So in order to earn 100, which are equivalent to 53.25% of the gross amount, you can just transform the equation a bit, and then you find out 100 divided by the net percentage is equivalent to the necessary gross amount. That leads here to the conclusion that 187.79 are necessary to produce a net result of 100 for a corporation. The net result out of 100 in case of a sole tradership is, with this particular income tax rate and trade tax rate, an amount of 55. So in order to earn 100 net profit, which are equivalent then by definition to 55% of the unknown gross profit, you can say, okay, let's transform that equation. And then we have 100 divided by 0.55, that's 181.79. And now if you compare that, you need to produce approximately 6 units more before tax in case of a corporation. Or you can even compare the two figures in form of a percentage. So you could form a ratio between them. And then you have the ratio between profit necessary in case of a corporation, and the ratio necessary for the sole tradership is 187.79 divided by 181.79. So that leads us to 103.3%. So that means a corporation has to produce only, I would get 3.3% more gross profit than a sole tradership at the highest tax rate. You could probably already say, I want to have the limitation of liability. That's worse for me to paying a premium of 3.3%, or to have a bit more, that I have to be a bit more productive. Also, you could say probably just by delaying the dividend payments over a long time, it should be easy to produce these additional 3%, for example, by way of saving the interest cost for credits, which would otherwise have to replace that amount of money, which now you can still keep within the enterprise. You can, for example, decide this. Sorry. Now, you can also think about more complex examples with more concrete data. You could, for example, say, is it better to run an enterprise in the form of a sole tradership again, or in form of a capital company? So, for example, a GmbH. And it shall already be decided that the enterprise is going to be set at Kleve, a small little hamlet somewhere in Germany, with a city trade multiplier of 417%. That's just an assumption. It's true in the year of 2021, but I never know when you are going to watch this video, so just take it for granted. Now, we also expect that your enterprise will need to take up a bank credit of several millions and have to pay an annual interest to banks of 800,000. Furthermore, there will be rent payments for a factory building of 400,000 per year. And it is expected that you can earn 200,000 profit with that enterprise every year. Okay. In case that you establish a GmbH, somebody told you that it were possible that your GmbH employs you as a manager for a salary, that the employment contract would be accepted. And additionally, we just assume that you got the signal that a monthly salary of 10,000 would be for this GmbH, for a manager with your qualifications and for the concrete situation, regarded as adequate. So you can't now say that's always adequate. It depends on the situation. You know, it must be a market-conformed salary for somebody having that position. And the basic question is, would the careful manager of the GmbH have concluded an employment contract with that salary also with you if you had not been a shareholder? No, that was the criterion. Now we just assume that's the case. 10,000 shall be adequate. Based on these data, we can first try to find out what will be the result in case of a sole tradership. Let's begin with the trade tax, because you know a part of the trade tax can later be credited to the income tax under present German law. So it would be probably nice to know the trade tax amounts beforehand first. So trade tax liability. The sole tradership is subject to trade tax, that's clear. We will take as tax base the trade profit, that is profit from business, plus or minus the adjustments under the paragraphs 8 and 9 of the Trade Tax Act. You remember that from Chapter 3. These adjustments are, in our case, to be made for the interest payments and the rent payments, and we assume there are no other adjustments necessary. The interest has to be fully added back, so 800,000 in the first place. Whereas the rent payments for the building are only added back with half of the amount, so with 200,000. That brings us to a subtotal of add-backs under paragraph 8, number 1 of 1 million. Then you know there is a free allowance of 200,000. The amount 200,000 has been fixed in the year 2021. In former years it was lower, but this is a definitive increase of the free allowance, so we only need to memorize that. The remaining amount is 800,000. And now you remember, I hope at least from chapter 3, that of this amount only 1/4 is added back, so 200,000. So that leads us to a trade tax base of 400,000. And now we get a free allowance because we are speaking here still about the natural person. So we end up with 3,500. Then this is taken times 3.5%. The result is 13,212.50. And this will be taken or multiplied by the city multiplier, so 417%. So the total trade tax will be 55,096. Now let's go on. Let's compute the income tax burden for our sole trader. The profit is 200,000. The tax according to the ESDG tariff for 2021 is 74,863, but a part of the trade tax burden based on 400% on the trade profit attributable to the owner can be credited. That is here 52,850. So only an amount of 22,013 remains as income tax burden. Now, if we add up the full tax burden, we ignore, again, for simplification, the solidarity surcharge. Let's just do as if it had been already abolished. Church tax shall be ignored. Imagine our sole trader is not a member of a church. So then the result will be trade tax 55,096, income tax 22,013. Total 77,107. That leads us to a percentage of 38.55% of the profit of 200,000. Now let's look to the foundation of the GmbH, which does the business. Then we have a trade tax again, but now the profit has been modified because the owner works as an employee and pays himself a salary. Now you see the 10,000 per month amount to 120,000 a year. So the profit, which is remaining here for the GmbH, considerably drops down to 80,000. We have add backs for trade tax as before. There should be no change, 200,000. So that leads to a trade profit of now only 280,000. There is no free allowance granted because for a juridical person there is none. So we have, remember there was a 5,000 allowance, but only for private associations without no economic aims, so institutions which cannot pay a dividend, which cannot run an enterprise. So there is no free allowance. So final trade profit remaining is 280 times 3.5% is 9,800 times 470%, 4866. If we now add it up, then we have the corporation tax is 12,000, 15% on the 80,000. Solidarity surcharge, again, we do as if it had been abolished. A GmbH can also not be a member of a church. Only natural persons can have a religion, so that's also out of consideration. And then we necessarily still need the personal income tax of the owner on the salary, Otherwise, our computation would not be perfect, because naturally this money does not leave the GmbH untaxed. It will be taxed in the hands of the owner, so we have that to take that into account. That's 41,263 in that case if the owner gets 120,000. Might be a bit lower if the owner can offset free allowances for children and so on, but let's take it plain and simple here. We had no other data available, so you know the income tax burden will be highly dependent on the personal situation of the taxpayer. Well, so probably if there are special expenses deductible, and in all probability they will be, then the taxable income will be lower, perhaps considerably lower than 120,000. Then again, and already the results will change a bit. Now, if we add that what we have assumed up, then we end up with a total tax burden of 40,000 for the trade tax, 12,000 for the corporation tax, personal income tax 41,263, or according to my remarks, which I just made now regarding special expenses, children, and so on, perhaps lower. You do not get a trade tax credit because this time the corporation paid the trade tax, and you can't credit trade tax to corporation tax. So we end up with a total amount of 94,129. That is already higher than in the case of a sole tradership. So if you later distribute the profits, the 80,000 to the shareholder, then a quarter, that is 20,000, will still come on top. So in that particular case, the recommendation would be clear: do not choose a GmbH. On the other hand, perhaps somebody would like to have the liability limitations of a GmbH. There, probably a tax advisor would say, what about forming a KG? And you are the limited partner. You know, a KG is a partnership. Everybody taxes his share under his personal income tax. So you would be the limited partner of a GmbH, of a KG. And so your share would be subject to income tax. Now you would need a full partner who takes over the full liability for the debts. For that, usually a tax advisor would say, okay, if you don't have any partner at hand whom you trust, and probably you don't have such a partner at hand, then let's just establish a GmbH with a small amount of capital. That GmbH becomes your partner in the KG and thus the full partner. So that construction would be a GmbH and co-KG. The GmbH and you form a KG together. Now, naturally, you would say, who shall be the owner of the GmbH? And tax advisor says, what about you? So you set up a GmbH, own 100% of the shares, the GmbH, and you form a partnership in form of a KG. You do the limited partner and pay income tax on your share of the GmbH, is the full partner and pays corporation tax, etc. on its share. Now the question is, how do you define the shares? Which percentage goes to you, which to the GmbH? And a really devilish tax advisor now would try to propose, well, what about giving the GmbH a percentage in the profit of nearly zero, and 99.9% or even 100% of the profit goes to you personally? Then you have exactly the same tax situation as in the case of a sole tradership, but you also have a legal construction where you yourself are not liable for all the debts and obligations of the enterprise. Good. Such a thing might already come out when you make such case studies and analyze concrete situations. Now, very often you are also interested, if you have a kind of an academic mind, you want to draw general conclusions. And the question is that possible? Because my results in the former, a bit more complex situation, all resulted or all were based on concrete numbers and figures. And so I am not sure if I can generalize that. So you could ask yourself, is it possible to find an approach where you can really, with mathematical precision, bring forward a theory or a remark how much a certain component of a tax base influences the tax burden? So could you say, how much does agreeing on the wage for the manager influence my total tax burden? And where does that concretely depend upon? Well, there might be the practical answer. Just take an Excel sheet and try to fiddle around and vary the situation, and then you get a feeling. But this is not really an exact thing. It might be that all your examples all point into the wrong direction or point into one field, and then you never know if something else is possible. So mathematics would be a great help instead of Excel. So the question is it possible? And the answer is naturally yes, you can. Or you can learn it, at least, if you grasp the general idea. The general idea is that you need to formulate all the relevant facts which determine the total tax burden in form of equations or mathematical terms, so with variables. Here a problem shows up. You always have different tax bases, because income from business is not the same as what you define as profit, because you have non-deductible expenses, you have some tax-free revenue, and all such stuff. So the profit for tax purposes deviates from what is economically the profit. And then when you go to trade tax, the trade tax base is again different. So if you add up the profit here and the profit there in order to add it, then you don't have comparable amounts. And how can you formulate this into a mathematical equation in a way that you can add it up and compare it? And I believe in Germany, at least, that was Professor Gerd Rose in the 1960s or 70s, I don't know, when it happened, who solved the problem by establishing a so-called Teilsteuerrechnung, partial tax analysis, or analysis of parts of tax bases. The approach which he chose was very simple, but you don't come to the trick if you don't get it shown. He said the profit for income tax is what is the actual profit from an economic point of view, plus or minus some modifications which are added for income tax only. For example, the non-deductible expenses are added to the profit, the tax-free parts of the profit are deducted, and so he said the profit, the actual profit economically, is defined as P, and the deviation for tax law is called modifications, and MI is modifications for the purpose of income tax. And so he could just come to a simple equation. The tax base is to be written as profit plus modifications for income tax. So genuine profit plus non-deductible expenses minus tax-free amounts, all that what is added here, non-deductible amounts, deductible amounts, which have nothing to do with the economic profit, all that is MI, modifications of the profit for income tax purposes. Now you can simply follow the same approach for other things. For example, corporation tax is not always completely identical with the tax base which you have under income tax. For example, for corporation tax, there are some other tax exemptions. There might also be the one or other non-deductible expense which does not exist in case of an income tax case. For example, half of the fees for the supervisory board members are not deductible. So it might be that you have additional modifications. Furthermore, it might be that just depends on your motivation and what you want to analyze. It might be that you want to find out the impact which a wage for the manager has on the total tax burden if you can pay it. So then you would probably say, okay, we distinguish or we redefine the profit as the profit which we would have under income tax minus the wage for the manager who is a shareholder. Because the problem is, if you have an employed shareholder working as a manager, that would lead to a difference in the profit from the tax perspective for corporation tax and the profit in income tax. So it might be better to say, okay, we look to the profit before the manager's salary is paid. That is equal for income tax and corporation tax. And in case of a corporation tax, we can then still deduct the wage for the manager. So we might define that as WM, wage for manager. So then you have the following tax base. I hope I didn't forget anything. So the profit, which would result under income tax 2, plus modifications for income tax. And the differences to the income tax tariff would be minus the wage for the manager, plus, if they exist, modifications for the purpose for corporation tax. Yeah. And if they don't exist, you can just say, okay, MC has a value of 0. So it doesn't spoil your equation if you come to the result it doesn't exist. Now, for trade tax, you could also define the tax base looking on such modifications. Now, naturally, there are more kinds of modifications. The modification for trade tax, if you call them MTT or so, then you would have to take into account that these modifications, for example, under paragraph 8, number 1, are calculated in a complicated way so that you cannot see a direct connection between an interest payment and the outcome for trade tax. So if you want to follow that a bit more closely, then it might be that you define certain things individually. The rate for trade tax, let's say RT, then the modification due to a free allowance of 24,500 if given, so modification trade tax by free allowance, the modification which results from interest payments, the modification which results from rent payments for buildings, the one from rent payments for machines. Now I just made an abbreviation and said modification of resulting from all other add-backs. If you were really precise, you would add them all up as different variables. Now the add-backs under 8 number 1 are meant by this, and there are other modifications, for example, tax-free dividends, a deduction for real estate property. You all remember that, and these modifications would also be added. Good. Now then we arrive at a nice equation for the trade tax, because the trade tax base would be the income from business, which results from income tax or corporation tax. So in case of a corporation, you would have P minus wage for manager. In case of income tax, wage for manager would be 0, plus modifications for income tax, plus modifications for corporation tax, and then the add backs come on top. The add backs under 8 number 1 would be the modification of the interest payments, then half of the rent payments for buildings, then 1/5 of the rent payments for machines and similar movable property, then all the other modifications under 8 number 1, minus a free allowance of 200,000. All that what remains taken by 1/4. Then you had to add all the other modifications contained in 8 number 2 to 8 number I don't know where at the end, plus all the modifications under paragraph 9, Trade Tax Act, minus, if applicable, the modification due to the free allowance. It's either a 0 or 24,500. That would be taken by times 3.5% times the city multiplier. You see already, if you do it very precisely, due to that complicated trade tax-based definition, you probably end up in deepest madness already here. But mathematically, it works. The approach can be done. You only have to analyze the legal rules precisely and to decide, okay, for which kind of modification do I want to introduce an additional single variable, and what can I view together as a whole. Yeah? Now, you also, if you are an income taxpayer, get a credit for income tax. That would be calculated as your trade tax base, taken times 3.5%, and then either taken by 400% or your local trade tax rate. And so that can be defined as the minimum of the trade tax rate and 400%. In case of a sole trader, then you would also have to pay income tax on the profit with the tax rate for the income tax. So RI. So we can simply say RI, tax rate, income tax, your average tax rate, multiplied with the profit plus the modifications for income tax. Corporation tax could be expressed as, if RC is the tax rate for corporation tax, corporation tax rate times or multiplied by profit minus wage paid to the manager plus modifications for income tax plus modifications for which only exist in corporation tax. And then you should not forget that the dividends payments come later on top and will be taxed by 25%. Or you could also say are dividends, if you want to have a more general expression of the 25%. Now, if P is the profit which you have before the deduction of the manager's wage, and you want to say that all dividends will be paid out and nothing is retained as earning in the firm, then you could say the profit minus the manager wages can be expressed as that what is left over, which you can really distribute. Yes. And you can and shall ignore the modifications here, because let's say the non-deductible expense has to be deducted during the computation of the profit, and then this data added back for tax purposes, but the money is gone. So it's right not to add it when you think about the money which you can distribute to shareholders. So the approach here is indeed correct. So we end up with that nice complicated formula. Now, the total tax burden would be corporation tax burden, first line here, plus trade tax, second and third line here, plus the income tax which the manager has to pay on the wage tax. Now, you can show this as a nice equation, and you can try to transform this by dissolving the brackets and transforming it in a form where only summons exists. Now you can rearrange them and simplify the whole thing. So if you compute that, here I highlighted in red all the factors where P is contained in. Then in green, every summand which contains the wage paid to the manager. Then the modifications for corporation tax are in yellow, and the modification for income tax in blue, and the minor modifications in gray. Now you might rearrange them. That is just change the order here, and then we might form some brackets again. So if we have made no mistake until now, and we most probably have overlooked something, that's fate. So you have always to properly check that. Then P is multiplied with this factor here. The wage paid to the manager is multiplied with the factor in green in brackets. MI is multiplied with the factor here. MC with the yellow factor, then the gray ones with the factor in front of them. And you can again transform that by multiplying the numbers which you know, and so simplifying things a bit further. For example, naturally 1/2 of 3.5% times trade tax rate times 0.5 can be simplified. You can replace that by 0.04375, or you can replace 25 times 3.5 times RT times the interest payments by 0.00875 times RT times modifications for interest payments. Well, if you want to get more precise, you could then replace RT, the freight tax rate, by the applicable trade tax rate. And you could even replace RC, the corporation tax rate, by our well-known corporation tax rate of 15%. But having such formulas, it would be a great help. The formula would, for example, here show that in case of a corporation, the influence of the rent payments for the machines on the tax burden, the additional tax burden, which is caused by that, is relatively low, 0.00175 times the trade tax rate. times the amount of the rent payment. Now, if the trade tax rate is approximately 407%, yeah, then we end up with less than 1% of the rent payments as additional tax burden caused by the trade tax add back. Okay. You can also, for example, evaluate the effect of that free allowance of 200,000 euro, which you get deducted from the add backs, because it's just effectively, if my transformations of all the equations were correct, one never knows it, then that would lead just to effectively a kind of a reduction of the total tax of 1,875 times the city multiplier. So in our case, city multiplier a bit more than 400%. So in our case, perhaps something between 9,000 and 10,000 euro, perhaps. And only that under the assumption that you can really use up the whole free allowance of 200,000. So this is a relatively small amount if you have add backs which are, if you have payments which are higher than the free allowance in total. Yeah, so one would probably not have suspected that. To sum that up, you can and you should be able to transform your knowledge about the definition of the tax base and the computation of the taxes into a mathematical formula. The trick which allows you to model such a more general approach is that you just take into account that there are differences between different tax components, tax bases, and that you just say what's the common core of all the tax bases, let's say that what we call profit, and that the differences are just defined by you as modifications. So plus MI plus MC and so on. And if you then have modeled the tax bases correctly, then you can develop formulas for what comes out, how one defines or calculates the total tax burden. Then if you don't make a logical mistake at that point, which you probably do first, until years later somebody tells you, okay, you overlooked something, then you can begin to calculate the whole things, rearrange the summons, add it up as we did it in the example, and then you in the end up with a form of the equation which shows, okay, P contributes to the total tax burden with a certain factor, in brackets. The wage paid for the manager contributes to the total tax burden, lowers it or increases it by a certain factor, and so on for each individual component. And then you have the chance to find out precisely, with mathematical precision, you can then find out what is the effect of a variation of one of these components. And then it's really foolproof. Because it's mathematics, and as you have probably learned from other professors, mathematics is a science which is relatively precise. So that would be great, and you should try to understand that basic approach. You could also try to apply that to things which you know from time to time in a bachelor thesis or else. The practical problem with such an approach is only after you understood the basic tricks, not to make mistakes when you set up the equations or the terms trade tax base is blah. That's difficult not to forget something or to not to mix up the definitions of the variables. Then, naturally, when you transform the original equations into the form which we need, there are ample possibilities to make calculation mistakes. And so you will have to check it several times, or the best way is to calculate it one day and to recalculate it another day and from scratch. And then to show if the same thing comes out. Then, if not, there must be a mistake. If you are at least sure that you either made the same mistake each time or that it could be correct. By the way, the equations which I just showed you now, that was the first time that I practiced that for a long time. So I don't give any guarantee that I did not overlook something. I'm pretty sure it takes usually several approaches until you end up with the correct system of equations. So might be that also the thing which I showed you during this video has the one or other mistake resulting from carelessness, where I overlooked something or where one could at least discuss about. So concerning the previous formulas, it might be a good idea to have a look, go and inspect them if there can be a mistake, if everything has been taken into account, if things have been left out, why do they have been left out, and so on. That would be probably a challenge for you. Well, I think that was enough for today. Perhaps during the night, this night, you will probably dream of things like that. Formula like that. By the way, when somebody says taxation isn't that plain and simple, these people might exist, then take out this slide and say these are some calculations which I sometimes have to do on my own. But it's really a good tool of analysis, so get familiar with it, and that should be enough for today. Enjoy. That's it, over for today. Try to understand the basic approach and try to develop some imagination how you could apply kind of approaches like this one to situations or questions where you personally want to find out something about economic consequences of tax law. Okay, let's finish now. It was great that you listened to this video, or yes, I hope you did. And would be great if you come back to the channel. If you really liked it, like it, recommend it to others. If you didn't like it, recommend it to others nevertheless, and have some fun when you imagine how they suffer, and come back at the next time. Thanks for watching and goodbye.